morning, everybody. Kyle Custer here, Senior Analyst, and today we're going to be talking about the Treasury curve and what's going on in the interest rate market around the world. First off, let's talk about the U.S. Treasury curve, and what we're seeing is a little bit of a flattening of the yield curve. This is last year. June of last year is the yellow dotted line, and the green line here, that's representing the current yield curve. And obviously, as the Fed had hiked up rates, we're seeing the short end move up, and over time the long end has moved down. So we're seeing a little bit of a flattening, and of course not good news for bankers. You obviously do not want to be lending out with a spread that continues to level out. So very important that we're going to be watching these short-term rates as the Fed decides whether or not to increase rates in the next week and the meeting after that. So we haven't really had a chance lately to talk about the Brexit. So that seems to be a very hot button issue right now, and I did want to touch base on it since we are talking about the yield curve in the U.S. Treasury market. So what we have here, same thing, selected rates from last year and the selected rates today. So we have the yield curve for the U.S. Treasury, which we just talked about, has been flattening a bit. But in this slide, I really just wanted to point out that these are the current rates. And several countries, several major economic powers in the world are issuing debt up to 10 years at negative or nearly negative rates. In fact, Germany is just on the cusp right now of 10-year debt yielding nearly 0%. So major issues. This is probably a result of the whole Brexit scenario going on, and whether the UK will leave the EU. And something that really interests me. I had an opportunity to visit several of the governing bodies out there when I was studying, and it's something that we need to watch here. We may be seeing a flight to quality into U.S. Treasuries as volatility begins to really amp up prior to that referendum. And this is a little more digging deeper into those rates around the world. And what we're seeing here is something I thought was very interesting. Every single country I've listed up here, we have Switzerland, the UK, Germany, Japan, and the US, all but the US has essentially seen the shorter end of the curve drop as rates have changed. So we're looking at last year's rates and this year's rates, and Japan's short end dropped in the 30 basis point range. Germany, same thing. UK, pretty flat, but still dropped a little bit. Switzerland, they had a slight tick up, but generally speaking, their rates have dropped on the short end. US, we've seen a significant increase, obviously because of the Fed funds rate pushing things up a bit. And here's where we're seeing everybody else is not experiencing a real flattening of the yield curve, while the U.S. is. So it's going to be very important worldwide that what's going to happen at the Fed in the next week, as well as what's going to happen with the UK and the Eurozone and the exit. So I think in the next couple of weeks is going to be very interesting on the interest rate market. That's all I have for you this week. If you happen to be in New Orleans, Jamie and I will be speaking at the FMS Accounting Forum down there. Please join us. We'll be speaking on Tuesday. And thank you very much.